Everyone thinks that Tesla already made its big move, but the chart is setting up something traders usually miss right before volatility spikes. Here's the level that decides if Tesla explodes higher or traps late buyers. Now, as you can see, Tesla is a pretty obvious big bullish move into what appears to be a range here, okay? Now, if we were to figure out the midpoint of this range, we would find that it's somewhere subjectively right in here, okay? Now, with this being the overall identifier for this range, we now know that we are looking for swings both above and below. So from this perspective, the swing distance of this move here should be subjectively what we're looking for underneath. So don't be too surprised if we find ourselves somewhere right around 416 and 3/4 as the market opens. Now, when we find this is kind of like the first variation. We should look for a nice bullish return to go all the way back up to the prior high, and even potentially look for that swing distance for however deep we go to be the exact same symmetry pattern above, okay? So in this circumstance, we would look for the swing to be somewhere right around 421 as the market rotates to the upside. Now, this is the most preferred variation overall, so just be keeping this on your radar. Now, with that being said, we also can look for a sell, but for us to sell in this particular point, we are too low overall, and we're still stuck in this range. So we will have to break out of the range on strength to justify the momentum has now shifted permanently. And if that's the case, then it's just as simple as now being patient, waiting for the pullback and ultimately a return back down to the downside in this bear case scenario, okay? But again, make mention of the fact that just because we go down just a bit lower doesn't justify us being out of this range. As you can see, the major level of support goes down pretty far, and we can even go down a bit lower and still be bullish overall. All right. Now, other than this variation, what else could happen? Well, because the market obviously swings on both sides of the pendulum, we could look at the resistance now being subjectively above here like so. So if we do find ourselves all the way back up to this prior high, just be aware that more than likely the market will sell off coming back down to the downside, keeping this range intact. But because you're trading against momentum, you definitely need a GNR pattern specifically in order to rotate the momentum in the bear's favor. Now, once we get back down to this low, it's pretty much as simple as looking at the first two variations that we mentioned before, because again, this is a range and ranges rotate. Now, lastly, it won't be until we break out substantially higher do we justify the means to be a continued buyer at these higher levels. And again, it's just as simple as being patient, waiting for a dip buy, and the rotation now going back to the upside. Now, don't forget, these are just basic variations. There are several other ones that you need to be aware of as we push up higher and lower. But again, this should give you the blueprint on how to make some money trading Tesla. Thanks for watching. See you in the next candle.